What's good? What's good? We're here with another video, and we're going to be doing another back testing video. You know, I love back testing, man. Back testing is really where you get your confidence from. Back testing is really where you get that trader's intuition from. Also forward testing, but especially back testing. When you back testing, you see your strategy work over and over and over again, and you see when it doesn't work over and over and over again. You build that intuition of knowing when you're not supposed to get in, when you should probably slow down, when you should probably do less, when you should do more. And all of these those are going to be the real things that's going to be able to keep you profitable. I've learned that that's the real things that's going to allow you to be profitable and allow you to find success in forex. Forex and futures, whatever you're trading. I primarily trade futures. Today we're going to be looking at forex though. We're going to be trading the London session, but I just want to say, like, you have to understand that back testing is a very vital, important piece to what you are trying to do in this trading game. You have to be back testing. You have to be going over your strategy, looking at it, and also taking screenshots and things like that, and then putting them into, a Google Doc. So something like this, something where you got words and stuff in there, and you're just putting them in here so that you can come back to these on a later day and see, what you did. And this could also give you that confidence you need when you're also having those days where it's like, damn, I'm not really feeling it, or I feel like I'm not really, going to be able to keep this up. Just go back to your stuff and see how you were operating and see what you were doing, and then that'll give you that confidence, because this is experience you gained, and that now you can hold this experience and store this experience into a doc. So just things like this, and then you want to copy the thing so you can actually go and look at, what it is that you were marking up. But let's get to it. That's a long enough talk. So, like I said, we're going to be trading the London session, so we're not going to be trading New York. Because I found that with Forex, the London session is the one that's really going to have like the really good moves. You're going to get good moves in New York, but a lot of times that London session is just going to go crazy. And then, New York, the first half of New York, a lot of times is going to probably consolidate, or going to be a little bit more rough to get something out of the market. So we're going to be doing the London session. So it's 9 o'clock right now in the morning. So we'll just skip through all this. Fuck, we'll go to the next day. I stay doing that. All right, so that's what that day did. So we just created a fair value gap on the higher time frames. Now, price is going to want to take something or hit something. So it could take liquidity right here, or we can come, I think we've already passed the consequent encroachment of that wick. But price can come here. We also have this daily order block right here that price could want to be seeking into. So it's like, if we're thinking power of three, we're automatically, our bias is going to be bearish, because the last previous candle was a down close candle. So what we want to see is, we want to see price move up and then wick out and start to head into maybe these lows and then maybe this order block. So that's why, since because I already seen the move, like the move already happened. So I'm not going to even be able to, if I went down to the lower time frames, I would already see it. So we'll just go to the next day, and I just got to make sure I don't go past 2 o'clock. So 10, 1, all right, 2. So like I was saying, like, we have price coming up. We had that wick out, and now we have price. That's that. This indicator I have, it's like an indicator, but really it just lets you, allow you to see that daily candle when you go down to the lower time frames. So you see how it left that wick, and now we're starting to price downward. So we'll probably be seeing price want to, come and touch into this area, I feel like. Now if we go home, let's look left again, just to make sure, because like, you got to also be weary, like, okay, we have sell side that was taken. So we may not immediately start heading down here. Let me change that to red. So we could, you know what I'm saying, try to come up. Now, also, this, you see how we have these consecutive up close candles and there's no break down close candles in the middle of this? That is what we consider an order block. Once price breaks below that, now this whole area becomes an order block. And so price can, what we want to see is we don't want to see price close or start, you know what I'm saying, coming and pricing up in this area. If it is going to come up, I would want to see it come to this Cibi that's right here. You know what I'm saying? I don't want it to go past the Cibi. If it goes past the Cibi, then it's most likely we're going to try and come and fill in the rest of the. We're going to fill in the rest of the order block. Like we're going to possibly break above it. So it's 2 o'clock, like I said. We'll go down to the lower time frames. We'll go down to the 15 and see what the 15-minute is talking about. So on the 15-minute, we have a fair value gap right here, a Cibi. But this one we got to be careful about because where is the Cibi? The Cibi is right at that sell side liquidity. And I found that a lot of times when price breaks sell side or it breaks buy side and it hasn't filled in that gap or it hasn't touched it, a lot of times what it's going to do is going to break that liquidity and then break through that fair value gap because it already hit its target. Its target was the liquidity. We like to use the fair value gaps as ways to get in and be able to participate in that price moving to that target. But if it already moves to that target, then you can't be like, okay, I'm still taking it, because that's marrying an idea. That's what marrying an idea looks like, is when you marry the trade. You can't marry the trade all the time. So what I would want to see in this fair value gap, if we are going to continue down, what I would want to see is I would want to see on the 1 minute time frame. First of all, we have liquidity right here. So we have liquidity right there, buy side liquidity. I'm gonna make that more like that. So we got buy side liquidity up there. So I would want to see price come up in there, take out that buy side liquidity, maybe come into this Cibi that you see right up in here. You see how all this is fractal? You see how there's Cibis inside of Cibis, sell side and buy sides inside of sell sides and buy sides. Like it's fractal. And when you get things that start to become fractal and it starts to correlate with what you're thinking, then that's when you start having high probability. Now, that doesn't necessarily mean you're going to win your trade, but you have a little bit more confidence in what it is you're looking for. So it's 3 o'clock. So 3 o'clock hit. Okay, so we came up. And look at how we came all the way up here. So, okay, I want to see what price is going to do in this area. I didn't mean to do that. All right, so if we come and touch back into this area, I'll take the trade, and then my partial is going to be as price gets there. So once my partial gets there, once it gets there, I'll take it. Like that would be like my sign. Okay, I need to take a partial, and then my TP is 15. My stop loss is going to be 15 as well. So if price does decide to come down and touch into this fair value gap, then I'll get in. Yeah, it took off. Okay, so it took off. So now we have to be looking, okay, what is it reaching for? What are we now trying to reach for then? We have like these equal highs up in here that's like relatively close to each other. So we could want to be wanting to reach up into that. We also have that higher time frame, that 1 hour Cibi that's up there as well. So this now becomes an inversion fair value gap since price broke above it. And we can change that to, I'll make to do this. So maybe if price comes into there, Is price gonna come all the way down there? We just have to see. If it does, I'll take the trade. If it doesn't come, then okay, now we're in the trade. So it's 15.15. Boom, it hit TP. It hit TP. Okay, so you seen how when I was looking for an entry, or I was looking for, like I told you, we said I was looking for the sell. So if I was wanting to look for the sell, I would need price to come up here, break this buy side liquidity, and then show me a 2022 model. What does that look like? The 2022 model looks like, what I would need to see is I would need to see price come up here, maybe play around a little bit, do like something like this, come up, break above it again, and then have that displacement. And that would be that displacement that we need. It would be breaking this short-term low, and then there would be a fair value gap somewhere in here, and then I would take it for the sell. You know what I'm saying? But that didn't happen. You've seen how price just straight up disrespected the fair value gap. So since price straight up disrespected the fair value gap, now I'm like, okay, maybe we could be wanting to search and seek into that and I'm gonna change it so y'all can see it, but you can't really see it right now. But that middle line, which is the mean threshold, I'm gonna change that to that, and then I'm gonna do the thickness like that, so y'all can see the line. Or I may even, is it better if I do dash? Yeah, I'm gonna do dash. So since we broke above it super quickly, now we have an opportunity that price is probably going to want to reach into this mean threshold, and also reach into relative equal highs, and there's a SIBI up here. So there's a lot of confluence that's letting us know that price is probably going to want to reach into the area. And let's see if it does. And it does. It reaches right into that area. And you see, and let's go to like the hour time frame and see where did we close? Yep, we closed above it. So we closed above this CE. We closed above the middle point of the order block. So when we have stuff like that, that's letting you know that's a sign that price is going to want to try and maybe fill up the rest of this order block, or we're going to break above it, because if the order block was really strong, it would not be coming above this mean threshold. And that's the same thing with fair value gaps. If you have a fair value gap and price comes to it and it starts breaking above it and it starts closing above that CE, that consequent encroachment, the middle of the fair value gap, then that's when you start to realize, okay, maybe we could be seeking the higher portion of that fair value gap. And so, you know, that's the trade that we took. You obviously seen, you know what I'm saying, we had some adversity. We didn't have the entry that we wanted, but we didn't chase. See, what I did was a lot different than what you think what chasing would look like. I was like, okay, price is taking off. What did I do? I said, boom, okay, price is taking off. Let me look left. Where are we going? Where is price trying to get to? Well, what we had marked up, we had that 1 hour SIBI that was marked up, that we marked up before we came down to this 1 minute time frame. And that was this one right here. You see what I'm saying? And so we go down to the 15-minute time frame, and we've seen that we had that SIBI, and we've seen that we broke through that SIBI, and then now we were going to be reaching up into this SIBI because of the fact that we disrespected it so much, and we're now, since we're inside of this order block, now we're going to be seeking that CE. You see how all these things come together, all these things mesh together, and when you have those things mesh together like that, it's high probability. And so you can come down to lower time frames like the 1 minute, even the 30 second, the 15 second. Once you have the context and the structure in place, then you can come down to these lower time frames and then seek these entries like inversion fair value gaps, where price disrespects a SIBI, and now that SIBI becomes an area of where support happens. That's when support and resistance actually works, is when you have these type of things in context with it. So that's the video. If you guys stay for the whole video of this 14-minute video, man, y'all are the goats, bro. I appreciate y'all. Please like the video, comment, follow my page, share it, do whatever you gotta do to get it out into the algorithm so that we can get more people. Because I'm trying to create a community where like-minded people can come together, who's trying to escape the rat race, who want to be motivated, who want to be inspired and stuff like that, who want to just, you know what I'm saying, make a life for themselves. You know, we don't want to live a mundane life, right? We want to live a abundant life, a life where we can do the things that we want to do and not have to do the things we have to do. Everybody's doing what they have to do and not doing what they want to do. You're truly blessed when you can do what you want to do. So if you ain't willing to grind, you ain't willing to shine. It's simple.